All right, pipelines and IPOs, two things that always get the market buzzing. But what happens when it's not a brand new company, but a spin-off, already a giant in its own right, deciding to go public?
Yeah, that's what makes this deep dive so interesting. And the company, Southbow Corporation, they're not holding back. They've got some impressive stats right out of the gate.
Right off the bat, something caught my eye. It's their pipeline network. It's massive.
Absolutely. We're talking 4,900 kilometers. I actually had to think about that for a second. That's like laying pipe from New York City all the way to LA and then back again.
Wow. And it's not just the distance. They're moving a serious amount of crude oil through those pipelines.
1.25 million barrels per day, every single day.
That's a lot of oil. So who are these guys moving all this oil for? Who are their main customers?
So their client list is pretty rock solid. Refiners, big integrated energy companies, even some major producers themselves.
So we're talking about big names, established players in the energy sector.
Exactly, and that's a really good indicator of stability. These aren't fly-by-night operations. They're in it for the long haul.
Makes sense. Now, let's talk dividends, always a hot topic for potential investors. What's Southbow offering?
All right, so they're projecting a dividend yield of about US $2 per share. Now, for us Canadians, that translates to roughly $2.75.
That's not too shabby at all. But what about growth beyond just dividends? How are they planning to expand and use their capital?
Okay, so they're emphasizing a two-pronged approach, focusing on both financial stability, which is always good to hear, and of course, strategic growth. So on one hand, they're committed to reducing their debt, aiming for a leverage ratio for 4.0 in the long term.
Okay, so fiscal responsibility is definitely on the agenda. But what about expanding their operations? Are we talking new pipelines, acquisitions? What's the game plan?
They're strategically investing, and one project really jumped out at me. It's called the Black Rod Connection Project. It's all about connecting their network to this huge oil sands project up in Alberta.
Black Rod Connection. Sounds interesting. Why is this project so crucial for them?
Well, for starters, it taps into a new and increasingly important source of crude oil. This project links them to a SAGD project, that's steam-assisted gravity drainage, and it's operated by a company called IPC.
So essentially, they're connecting to a whole new wellspring of oil.
Exactly. And that's where it starts to get even more interesting, especially when you look at the bigger picture of the North American energy market.
So they're looking to ramp up capacity, tap into new oil sources. But how does this all fit into the bigger picture? Because, we keep hearing about this massive shift towards renewables, but it seems like crude oil is sticking around, at least for now.
Yeah, no doubt the energy landscape it's fascinating right now. On one hand, you've got this massive ongoing need for crude oil refined products. I mean, we're still so reliant on it.
It's true.
But then, like you said, the push for cleaner energy, it's gaining traction. It's undeniable.
Absolutely. It feels like we're at this weird crossroads trying to balance these immediate energy needs with, long-term sustainability goals. So where does a company like Southbow fit into all of this?
Well, that's the million-dollar question, right? And I think their position is pretty interesting. It's like they're bridging this critical gap, connecting that oil sands production up in Western Canada with the Gulf Coast refineries. Talk about a crucial link in the supply chain.
Right, so they're not just moving oil, they're strategically positioned within that flow. But then what happens when we throw in those projections about renewable energy, eventually taking center stage? How does that impact a company like Southbow?
See, that's where things get really interesting. Because, yeah, the transition to renewables is happening. No one's denying that. But it's not going to happen overnight, right? In
Yeah.
fact, Southbow's own presentation highlights this. They say by 2030, that crude oil supply coming from Western Canada, it's actually predicted to outpace the existing pipeline capacity.
Hold on, so even with the growth of renewable energy, there's still going to be this bottleneck for transporting crude oil.
Exactly. And Southbow, they see this as a huge opportunity. This anticipated shortage, it plays right into their hands, right into their whole growth strategy. They're betting on being one of the go-to solutions for getting that oil to market.
It's like they're kind of, I don't know, hedging their bets on this energy transition, taking a bit longer to fully materialize.
It's a bold strategy, no doubt.
Yeah.
Only time will tell how it plays out. But there's another layer to Southbow, something we haven't even touched on yet. They're also in the liquids tank terminal storage game.
Oh, right. Of course, not just transportation, but storage too. Smart move, diversifying within the energy sector.
Exactly. It shows a broader vision, a real understanding of just how complex this market can be. But let's shift gears for a second. Talk about investor confidence. Because projections are one thing, but what concrete indicators are there that South Bow is in it for the long haul?
That's the question on every investor's mind, right? What makes this a potentially sound investment?
I'll give you one word: creditworthiness. South Bow, they've actually secured an investment-grade credit rating. And that speaks volumes, especially in a market like energy, which, let's be honest, can be pretty volatile.
That's reassuring, especially for anyone a little wary of, the ups and downs of the energy sector. But a company is only as good as the people running it. What about the leadership team at South Bow? Are we talking seasoned veterans or a bunch of newcomers?
Oh, they've got a team with some serious experience. Decades. I'm talking decades of experience in the energy field. And not just the executives. You look at their board of directors, you've got folks with backgrounds at places like Talisman Energy, TC Energy, even Goldman Sachs. These are heavy hitters.
Wow, that's a lot of experience at the helm. So they've got the know-how, the infrastructure, a growth strategy that seems, at least on paper, to be pretty aligned with, where the energy market is heading. But even with all that, there are always external factors, right? Things beyond their control.
Oh, absolutely. And energy, well, it's about as dynamic and, frankly, as unpredictable as it gets. Those external factors, they can make or break you.
So what are some of those potential roadblocks, those uncertainties that could throw a wrench in things for South Bow, even with all the positives?
Well, that's where things get really interesting for anyone watching this IPO closely. And I think a good place to start is the regulatory environment.
Yeah, the regulatory landscape, talk about a moving target, especially in energy. What kind of regulations or even potential changes could impact a company like South Bow?
Well, you have to think about emissions, right? Governments everywhere are pushing those climate goals, and the pressure is on across industries to reduce that carbon footprint.
Hmm.
And pipelines, even though they're, transporting crude oil, they're not exempt from that.
So how could emissions regulations actually impact South Bow specifically?
It's a range of things, honestly. It could affect how they run their current pipeline operations, even the feasibility of future projects like that Black Rod connection we were talking about. We could be talking stricter environmental assessments, higher compliance costs, even limitations on, how much they can expand. It really depends on where those regulations go.
Right, and that's just one piece of the puzzle. Then you've got the global shift, everyone's talking about it, to renewable energy. I mean, how does that factor into South Bow's future long term?
That is the billion-dollar question, isn't it? Because, yeah, they might be strategically positioned right now within the existing oil market. But the faster the world moves toward renewables, the faster that demand for crude oil transportation, it could decline, right? It's a risk. You can't ignore it.
It really is a balancing act, isn't it? Trying to make the most of the current demand, but also being prepared for a future where that demand might look totally different.
Yeah, it's a tightrope walk for sure. And then, on top of all that, you've got the wild cards, the geopolitical stuff always looming,
Oh, right, always.
trade disputes, political instability, especially in those key oil-producing regions. I mean, look at what happened with, well, we saw firsthand what a global pandemic can do to markets, to everything. You can't predict that stuff.
Talk about curveballs.
Exactly, right. Like you can have the best business plan in the world, but some things are just beyond your control.
It really puts things into perspective, doesn't it? Even a company like South Bow, which seems to have it together, solid foundation, clear strategy, there's always that element of uncertainty. You can't escape it.
And that's investing for you,
Yeah.
right? Especially in a sector as, I don't know, as lively as energy.
Yeah.
It's not just about crunching numbers, looking at spreadsheets. You got to understand the bigger picture, the context, the risks,
Yeah.
things no single company can control. You know what I mean?
Absolutely. And that brings us back to you, our listener. We've laid it all out, all the details about South Bow Corporation, their assets, their game plan, their place in this evolving energy market, but now it's your turn.
Right, because you've heard the numbers, you understand how they fit into the oil transportation scene, the financials, the whole energy landscape. So what do you think? Do you think they're set up for success, even with those potential bumps in the road?
Do the positives outweigh those uncertainties? Or are those wild cards, those unknowns, just a little too wild for your liking? There are no right or wrong answers here, just hopefully some food for thought. We hope this deep dive has given you a few different angles to consider, some things you maybe hadn't thought about before.
Because that's what it's all about, right? Equipping you with the knowledge, the insights. You need to make sense of this crazy market and make those informed decisions for yourself, whatever your investment goals might be.
Sometimes all it takes is that deep dive, that closer look to really separate the signal from the noise. We'll be back next time, of course, with another deep dive, a whole new topic to explore. But until then, keep asking those questions, the tough ones. And as always, thanks for joining us on the deep dive.